All right, we keep an eye on the morning's movers. And of course, the host of Morning Movers, Diane King Hall, is here. So let's start off with Palantir.
That's a mover.
That is front and center. Some of your thoughts there. I did see a buy rating. That's
positive for it, but it's not playing into how the share price is moving. You've got some headwinds hitting Palantir today and yesterday. I mean, this really started yesterday. A couple different headwinds. I mean, the pressure started yesterday. It dropped double digits yesterday after that Washington Post report about the Defense Department expected to pull back some of its spending and look for program cuts. They're looking to identify $50 billion in program cuts, and the view was that that could impact Palantir given how much the exposure they have to government contracts. Washington Post saying that the Defense Secretary Pete Hegseth ordered senior Pentagon leaders, other military top brass to develop plans to slash the budget 8% over the next 5 years, and meaning 8% each year over the next of that half a decade. So that was where we saw initially Palantir take a leg down. Again, then you saw more pressure overnight and now today on this news. This was the CEO, Alex Karp. This is a new plan to sell up to nearly 10 million shares that will be worth around $1.2 billion. That raised some concerns about just investor concerns. Now, he did, with that move, cancel the previous plan to sell what would have been upwards of nearly 50 million shares. And it's not clear right now how much of that he may have actually executed. But again, this is a regulatory filing, and some of this could have clearly just been timing, and timing that Palantir and the stock didn't need in terms of the pressure. There's also another factor. I say there's really like two headwinds because those are more of a headline risk and with the regulatory filing and then the news in the Washington Post article. There's just been the concerns about valuation. I mean, Palantir has been one of the biggest winners so far year to date in terms of the members of the S&P 500. So it's continuing its trend that it saw from last year. But even with this pullback that we're seeing, there's still this question about, is the valuation justified for Palantir, Nicole?
Yeah, and you know, with Alex Karp now adopting a new plan on selling shares, people wonder about the big picture.
Right.
Because if, you know, is this going to dilute the stock, make it less valuable? At the same time, I mentioned to buy, which I know you're going to get into, and Dan Ives also said even the Department of Defense move could actually be a positive. Right?
Yes, I mean, Dan Ives is a big bull when it comes to Palantir, so it's no surprise to hear the commentary. So he expects, even where you see the pullback, he doesn't expect that to hurt Palantir, and he expects it to be kind of a net beneficiary of changes to defense spending plans, so that, in other words, if there is a pullback, Palantir wouldn't suffer under that. And then in terms of Loop Capital, basically they see those tailwinds that you talked about, Nicole, with regard to AI and growth there and the Gen AI revolution. And that is where you see bullish commentary around Palantir, especially when you see their growth beyond defense. They had a lot of growth in commercial contracts last year. And although defense still accounts for more on a volume basis, the growth trajectory for commercial partnerships is larger than the growth that we saw from the government sector. So Loop Capital, just really quickly to get into that, initiating coverage Palantir with a buy rating. They've got $141 price target on Palantir, so certainly some room to run from where it is now, even though clearly we're seeing this major pullback over the past couple of days here. But overall consensus on Palantir is a hold.
All right. And then we turn our attention over to Wayfair. A wider loss there.
That's right.
And not the furniture recovery remains elusive.
Yeah, it does. And initially the stock was under pressure in the pre-market, but then the earnings call happened. So you started to see things turn around. It remains to be seen what direction investors will take this, but right now you are seeing the stock move a little bit higher and really shake off the worries about that loss. Again, it was under some significant pressure in the pre-market. A reported adjusted loss of 25 cents a share. Street was expecting a loss of a penny, so that was much worse than expected. It did beat on revenue. Revenue topped $3.1 billion. Initially, that was not enough to counter the worries about the bleeding on its balance sheet. average order value was $290 in the quarter. So, you know, what you or I might pay for something from Wayfair was up. It was up from $276 a year ago. Some of that may just be the cost of things is more now, and consumers are kind of used to being more. Now, the company has said that consumers are not focused as much on furnishing. You know, consumers, we know we've had this conversation time and time again about how they're faced with inflationary pressure. And although inflation has pulled back, we've seen it tick up a little bit. And so when you think about Wayfair in the context of that, it's really one of those places that it's nice to have, not a need to have. And so if consumers are saving cash for the things they need, are they going to go out and buy a new couch, a new set of chairs? Maybe. You know, but not as much, not the strength that we'd seen previously, and that's seeing the loss. But again, in their earnings call, where you started to see things turn around, their projections of guidance. They're expecting Q1 revenue to be flat on a year-over-year basis. That is better than the consensus view. Right. The consensus view was for a decline.
So it's not as bad as it may seem.
Yeah.
Okay, so we'll leave Wayfair for a moment. That is up almost 2% after having been down prior, but now with some explanation and some more positive outlook, that has turned around. Last but not least, if you take a look at Carvana, folks, you'll see that this stock hit records yesterday, or at least 52-week highs, to be more specific. But now a big gap down.
Yeah, it is, and some of that may be because they did beat, and their guidance was good. Well, their guidance was a little. Actually, I should couch that. It was a little bit murky, and so that may be some of the concerns. Adjusted EPS was 56 cents a share. That was better than expected. Revenue topped $3.5 billion, also better than expected. They sold 416,000 cars in 2024. That's up from 313,000 in 2023. Their margins were better when you compare it to, you know, say AutoNation or CarMax. Their adjusted margin was about 10%. When you look at AutoNation and CarMax, they were single-digit margins. I mean, they were around 6% and 4% respectively over the past year. Now, they did see a decline in revenue per vehicle sold, so that may be a little bit of what's rattling investors. Also, again, you can take it in the context of the 52-week high. And then they also said they expect, quote, significant growth in EBITDA. So they don't usually give this kind of fixed number range. So you know, investors are like, okay, what does that mean? We need a little more clarity.
Yeah.
So that could explain some of the softness that we're seeing in the share price today.
And I pulled up a 3-year chart, still a high. I'll venture to say this could be the all-time high. But all right, we'll leave it there.
All right.
Because it's had an incredible run too.
It has.
Thank you. Diane King Hall, great to see you. We looked at 3 great names there. We looked at Palantir, Wayfair, and Carvana.